Karan, we got Charles here. What do you want to ask him?
If he has any advice on how to choose a partner or a teammate in this growth journey for somebody who's kind of starting out, what would be the best steps?
There's two things I would give you. And the first one's probably the common one that you hear everywhere, and that's finding somebody with complementary skill sets. First thing is you have to know yourself to find good partners, because you have to know what you're good at and what you want out of a partner to make sure you select the right partner or partners.
I'm Brian Briscoe, host of the Diary of an Apartment Investor podcast. And this podcast is different than everything else out there. I bring together a new and an experienced investor on each episode, and I let the aspiring investor ask the questions that they need answered. So if you're an aspiring investor yourself, you probably will have the exact same questions. Now, before we get to this episode, make sure you hit the subscribe button below and that little bell to make sure you get notified every time we post a new episode. And now, enjoy the show.
Welcome to the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe with Streamline Capital Group. Very excited for today's show. We have Charles Seaman back on the podcast. He was on quite a while ago. It's been far too long. And we got Karan Shah as our aspiring investor. So guys, welcome to the show.
Brian, thanks for having me.
Happy to be here.
Awesome. Happy to have you guys. So as tradition, Charlie, you're our experienced investor today. So let's talk. How's it going?
Brian, things are going well. It's been an interesting time in the market, but it'll be a time that hopefully provides opportunities.
Yeah. I think, looking back at it, most people are going to wish they bought more properties in 2023. That's my point of view, but I think I've said that every single year that I've been alive. So
yeah, you're absolutely right, I think.
Well, cool. Well, tell us a little bit about yourself.
Sure. So I'm originally from Brooklyn, New York, and I've been in Charlotte for about the last 4 years, full-time in syndication and in the multifamily space. Currently a general partner in 9 deals. Well, 7 technically, 2 that we went full cycle on.
Okay.
Under contract for 1, and we're always looking at new ones.
Yeah, I think that's a good way. So what were you doing before you jumped into multifamily?
The path that I had was probably an unconventional way into the commercial and multifamily real estate. I wound up working for a successful entrepreneur and business owner that owned several different businesses and commercial real estate. And I was doing that full time from 2005 to 2019. And when I was there, I learned a lot. And I had exposure to different industries. And when I first started there, it wasn't so much that I wanted to go into that specific role. It was more so just needing a job. And that was the best opportunity I had on the table at the time. And, after being there for a while, what I realized is, well, some of the other industries he's in could definitely be lucrative and there's a lot to learn, but they weren't really what I wanted. The commercial real estate side was always what I gravitated to. And that's what led me to multifamily and ultimately to syndication.
Nice. So it led you to that, kind of gave you exposure. What was going through your mind when you decided to take the leap? I think a lot of people who listen to this show are in a W-2, whether it's related to multifamily or not, but at some point you had to decide, I'm going to go start buying apartments. Walk us through that.
What I'll say is the answer I'm going to give is probably not the answer I'd recommend for everybody. One of the things that I was guilty of was probably thinking too much. And I used to think about all the things that could go wrong and, all the different ways that I could potentially wind up on the wrong side of the equation. And what I had to start doing was reconditioning my mind and reconditioning the thoughts that I put into it, and eventually just stop thinking and take action. And eventually what led to me leaving my full-time job and then going into the syndication was not thinking. I said, I just have to stop thinking and I have to start taking action.
I like that. I mean, it's true. And I mean, a lot of people call it the analysis paralysis or something like that, but it is absolutely true. At some point, you've got to stop thinking about it and just jump in. And I think I had that moment as well. There was one day where I was listening to a podcast and I realized I am not going to learn anything more substantial from another podcast. I need to start doing things. Shut off the podcast, picked up the phone and cold called a broker. That was it for me. It was like, I need to stop thinking about this and just start doing it. That's when my learning curve took off.
You can learn so much from a book and you can learn so much from podcasts, but eventually you just have to get out there and start doing it.
You got to do it. Got to do it. So, well, cool. So let's talk about your entry into there. So you realized you had to stop thinking, start doing it. What were the first things that you did and how did it work out for you?
So the first thing I did was I took a couple of courses with a well-known syndication program. And after I took those courses, I started connecting with brokers because my thinking at that time was, well, let me work on finding a deal, because if I find a deal, the money will come.
Mhm.
And that works great for single family.
Mhm.
Doesn't work so great when you're going out buying multi-million-dollar complexes.
Yeah.
One, because they're a lot bigger, and two, because if you're following the law, which we certainly recommend everybody do,
Mhm.
you want to have pre-existing substantive relationships with your investors in most cases.
Mhm.
So you really need to be building both buckets simultaneously, so that way you have investors ready to go as you find the deals. But
Mhm.
at that time, it was solely on finding deals, because my mentality was still, okay, if I find the deal, I'll be able to find the money.
Mhm.
And, I was still working a full-time job, because this was around mid 2017. So what I did was I started getting disciplined with the time I had available.
Mhm.
And traditionally at my job, I didn't usually take a lunch break. It was just kind of the company culture, you just go, go, go. There's no such thing as, breaks and lunch and things like that. But when I got into multifamily, I started making sure that I took some time.
Yeah.
And if it was 10 minutes, 15 minutes, if I can get a half hour break, but whatever it was, I would take that time to make phone calls, and I would typically schedule my phone calls in advance. So that way people knew I was calling, and it wasn't like, okay, I'm going to
Yeah.
call this person at 2:30 and I may or may not get through. Now I have an appointment. They're expecting my call, and
Mhm.
we'll connect.
Incidentally, I did the exact same thing working out of the Pentagon. Is I would schedule calls. Now my situation was a little different, but my phone was in a lockbox, outside my office. And so I had to go get my phone, walk up to where I had cell signal. But yeah, I did the exact same thing, carved out little bits and pieces of my time. Anyway, back to you.
Yeah. And what you're saying, that makes a lot of sense, because what I found is being disciplined and consistent goes a long way.
Mhm.
And it's not going to get you everything, but it'll certainly start laying the foundation. So it's like, okay, if I have 10, 15, 20 minutes, whatever it might be, if I can make a phone call or two during that time, and I can speak to a broker, I could speak to a property manager, whoever it might be that was going to give me the information I needed that day.
Mhm.
And then at nighttime, when I get home from work, then I can go home and I can look at deals. It didn't matter if I did that at 1 in the morning, because you can do that independently.
Mhm.
So I would use my daytime hours for any phone calls I had, and then my nighttime hours when I got home from work, and most times those were pretty late, just to do things that required independent use and not really other people, because I'm sure most of them didn't want to speak to me at those times.
Yeah. I mean, something else that I did, and I mean, you're talking some really, really good details, and I love it. But when I was in DC, I rode the Metro to work every day. And the Metro was my multifamily time. It was 55 minutes a day that I knew I would be sitting in one spot. I had very intermittent Wi-Fi access or cell access because we were underground a lot, but 55 minutes a day on the way home from work, I would spend doing the multifamily stuff. You just carve out as much time as you can during the work day or the given day and keep pushing forward. So I love it. I love it. So let's talk about one of the deals you guys have done. I mean, you gave some really solid advice on how to start picking up and gaining traction. Once you started getting traction, let's hit one of the deals that you've done. Tell us a little bit about, how you found it, how you funded it, and how it's gone.
So what I'll do is I'll talk about one of the ones after the previous appearance on the podcast, so we can give people something different.
Right.
I'll preface it by saying the moral of the story in this one's going to be tenacity. And sometimes
Mhm.
that's going to be an important quality in this business.
Oh, it is.
So one deal that we have in Augusta, Georgia, we closed on it last April, about a year ago from the time we're recording this.
Mhm.
And we first found the deal in late November 2021,
Mhm.
got it under contract in December 2021.
Mhm.
And even with the extensions, we were supposed to close by March 2nd, 2022.
Mhm.
Well, we hit some snags along the way. Mortgage broker we used, unfortunately, didn't give us the result we wanted, and we didn't wind up getting a financing application in,
Mhm.
at
Ooh,
least not in time.
I think I see
Then
where
we-
this is going.
Oh, yeah.
Yeah.
We had our backs to the wall, and we decided to submit an application with a hard money lender, because that was the only way we were going to meet this closing deadline.
Mhm.
So we knew the terms from the hard money lender weren't going to be favorable, because that's, it's obviously what hard money is.
Yeah.
But once we actually saw the numbers come in and we started playing with the underwriting, we're saying, boy, there's a lot of things that need to go right for this deal to work with this financing.
Mhm. Yeah.
And it got to the point where our whole team, we met the night before we were supposed to close, 2 nights before.
Mhm.
And even having $280,000 in risk capital at stake, we decided the best path forward was to walk away be in default, and forfeit the risk capital. So certainly not the decision that I wanted to make. I don't think the decision that any of our team members wanted to make, but we thought that it's just going to take too many things going right for this deal to work, and that this was the best option. So keep in mind, guys, if walking away from $280,000 is the best option you have, that's not a choice you make easily.
Yeah, that is a good point. And I'm glad you brought up that deal and not one that worked out, because I think a lot of people need to hear that. Sometimes the best option is to lose money before you close on a deal and walk away than hope that 99 things in a row go correctly.
Right. Now here's the caveat, though. So the following day, I called the broker up at perfect timing. He was skiing the slopes in Colorado. I'm sure that was the exact time he wanted to hear from me with bad news. And I called him probably around noon, and I tell him, Mr. Broker, we have some bad news. Unfortunately, we're not going to be able to close tomorrow. Tell the seller you can keep the risk capital. We apologize. We dropped the ball on it, and it is what it is. So that had an unintended result. They called me back about 3 or 4 hours later with the seller on the line. And the seller said, look, why don't we work out an extension? Which is funny, because we had tried negotiating another extension with him prior to it, but he wasn't very negotiable with it.
Yeah.
And now, after we'd actually walked away and told him he could keep the risk capital, they came back and wanted to negotiate.
Yeah. Interesting.
And we wound up getting 45 days, which was enough, because then at that point, at least we could submit a conventional bridge financing application, which nowadays probably isn't that much different than hard money, but a year and a half ago, it was still a lot more favorable than hard money.
Yeah.
So we decided to move forward with it, because we said, okay, well, if we have the time where we can actually get a conventional bridge financing application in, we went back to a different mortgage broker that we worked with in the past, who we knew would delivered for us, and we got the deal done. It certainly became a nail-biting experience, because you went from telling the broker that we're walking away from $280,000 of risk capital, to having him call back with the seller on the line, and then actually getting an extension that we were trying to negotiate before, and then getting across the finish line and actually closing it. So it took what could have been a massive loss and made it a win. So that was a plus.
Yeah. Awesome. Well, I mean, fortunate that the seller wanted to work with you, and we were selling a property right about the same time where the buyer had a similar thing. And we kind of looked at what we were faced with, and we knew interest rates were going to be hiking. And actually, we chose to do the same thing because we figured we could probably get a higher price from that current buyer than we could from putting it back out on the market. But
I think that was kind of the seller's thinking too, because being that happened in March 2022, that was at the point where rates were starting to go up, and there was a little bit of fear in the market. It was still very much a seller's market, but I think people were seeing that the tides were shifting at that point.
Yeah. And so yeah, you guys were fortunate. You turned that $200,000 loss into a 45-day extension, and that 45-day extension was enough to get you better financing, and all of a sudden deal works back. So awesome. Hey, well, thanks for sharing that. I appreciate that. So shifting gears slightly, and I love, this is probably, I have lots of favorites about the podcast, but this is my favorite question to ask. But what's your big why, or your big burning why, as I like to call it?
It's a good question. It's probably something that I've always struggled with, but I think the big one for me initially is autonomy and having control over my own destiny. Then the next one, eventually down the line, will be philanthropy, but I'm not there just yet.
Yeah. I think, my why, when I first started my why, it was to get out of my W-2. When I first started multifamily, that's what I wanted to do, get out of my W-2. But, once I got out of my W-2, I had to really think about it. And it turned out that my why was deeper than I ever verbalized. My why was to be able to spend time with my family, and spend time with the people that I loved. And, it ended up being that I just had to kind of sweep away the top layer of dirt and start realizing, okay, this is what my why really is. It wasn't, the W-2 was just kind of a manifestation of it. But yeah, I think philanthropy, I love that one too. But anyway, last question for you. What's next for you?
Well, we have some big goals this year. So I'm with the Cash Flow Champs team at this point, and the goal that we have is we wanted to do $500 million in acquisitions this year. I don't know if that'll happen. We're probably off to a little bit of a slow start, but I have a feeling things are going to pick up as we start seeing the year move on. And we see maybe a few more distressed deals come to market.
That is a big goal. Now, how did you guys come together? Actually, not going to be the last question. I'm going to, go back and dig a little deeper. You mentioned this before we started. You used to be with Three Oaks Capital. I used to be with Four Oaks Capital, and now we're Oakless, but how did that come to be, and how did you join that team?
So what happened is, like with any relationship, sometimes they serve a purpose at one time, but not at another.
Mhm.
And I'm thankful that my prior partners and I, we left on good terms. We just had different visions for where the future was heading.
Mhm.
And for me, I'm very much full time in this, and it's something that I've probably devoted too much time to. I probably need to devote a little less to start getting a social life. But it's something that my goal is to do more deals and bigger deals. And I wanted to find a team that was going to allow me to do that.
Yeah.
So with two of the partners that I started Cash Flow Chance with, Ryan Murphy and Prashant Kumar, they were both guys that I'd worked with on deals. I wasn't in a formal partnership with them, but I'd worked with them on a deal by deal basis. And I could see they both had really strong work ethics. So, my initial thought was, okay, I'm not going to rush into a new partnership. Let me, for lack of a better term, stay single for a while and kind of see what's out there and see, what the right fit is. But then I wound up jumping into a new partnership about a month later. And I said, okay, you know what? I've already seen how these guys work. I know their commitment. I know their work ethics. So I felt good about that.
Yeah.
And then we wound up adding 3 more partners. So we have a pretty big team, which is part of the reason that we have big goals. I said we have a lot of mouths to feed, and we have to make sure that there's enough going on to do that.
Yeah.
So the objective we had is finding people who were looking to do big things and who were willing to put the commitment in behind it. And we're all at different levels and we all have different skill sets, but overall I think we all felt it's a good team to move forward and to be able to build a nice strong foundation with.
Awesome. I appreciate you sharing that. And probably about time for me to bring Prashant back on the show too. He was on quite a while ago. It looks like you guys came on right about the same time. It's been
Small world.
about 2 years. Yeah. So probably I'll reach out to him and get him back on the show too. But well, cool. Well, that was the last question I'll ask you for now. Right now, we're gonna, shift gears again. And Karan, welcome to the show, man.
Happy to be here.
Awesome. So tell us about yourself a little bit.
Okay, so I would say I did my engineering back in India. I worked for a few years with my father in his business, came to US, did my MBA in finance, and then started working in my W-2 job. A few years later, I got married, and my wife had an IT background, but she wanted to do something different. And me and my wife's family, everybody is in business. So doing job was not natural, but I guess we just got into it. So we're like, let's do something of ourselves. And we stumbled upon fix and flip, joined some courses and learned about it. And like, okay, let's do real estate fix and flip. So we did that for a couple of years, did few flips, and realized that's too much stress that goes in, and it's not a long-term wealth building process, I guess, to a certain extent. And at the same time, we bought like one multifamily with one another friend of mine, and we just saw that we can do that better than just doing flips, I guess. So that's when we switched gears, got into small multifamilies, 2, 3, 4. So that's where I'm around 22 doors, but around 8 properties, doing fix and flip pretty much because we're like buying distressed properties, fixing it up and putting the right tenants in place. So improving the NOI and buying property at a discount and all those things. So raising capital, doing it. And then I realized that everything I'm doing is not really improving the valuation of the property as much versus I got into this apartment stuff. And then I realized I'm doing something similar at a smaller scale, but there is a new world out there.
Yeah.
And that's where I started Googling and finding people out and started going to conferences. And that's where I am right now, trying to see how can I get over that hump of 4+ units, I guess, because I've been doing that and getting to commercial real estate. So that's kind of my story. That's where I'm right now.
So you got a taste of it with smaller properties and you like the taste, and now it's just like, how can I keep on doing this?
Yes.
Yeah. That seems to be a very common trend for people who are in the multifamily space. Is they start with the smaller ones. A lot of people start with fix and flips, or I thought I was going to be a buy and hold investor with single family, but I ended up selling them all off to get into multifamily as soon as I figured it out. So
Sometimes you don't know what you don't know. And that's what
Yeah.
I feel like before I started Fix and Flip, somebody had told me about apartment. I would have started it earlier and
Yeah.
been much better off. But I guess you don't know what you don't know.
And I remember one time, I've said this many, many times on the show, but I remember one time, when I read Rich Dad Poor Dad, 15, 20 years ago, he talked about multifamily in there. And I remember looking at that thinking, man, there's no way I could figure out how to buy an apartment complex, but I can figure out how to buy a single family home. And so, yeah, not knowing what I didn't know then, oh my goodness, I wish I could go back to that moment and say, I need to figure out how to buy an apartment complex and just, figured it out. But anyway, yeah, not knowing what you know, I think everybody goes that path because it's something that's obtainable. Well, cool. So in a W-2, your wife's in a similar field. Favorite question coming to you now, what's your why? Why are you doing this?
Sure. So, I'm doing okay, I guess, with my W-2 jobs. My wife, along with real estate, she started doing her IT job as well. So we make decent. But again, my long-term goal is kind of financial freedom, freedom to choose what I want to do when I want to do. I just got a newborn, 6 months, so he's 6 months old. So sometimes my wife says, I just don't want to work today, but she still has to because she has some commitments. So I guess financial freedom and freedom of time. And secondly, again, my father is well-to-do, I guess, to a certain extent, but he used to do some stuff for his father that has never happened for him. So my father's done a lot of things. So for me to get to that level, to experience something that he has never done, I need to really do well, I guess. So it's just helping my family live a different level of life, and at the same time following my passion and really getting the best out of myself, because I just feel that I'm capable to do a lot more than what I'm doing right now. So those are the few whys that really pushes me every day and trying to do more than what I've been doing before.
I love it. I love it. Well, here we go with how we can help you now. So, Karan, we got Charles here. What do you want to ask him?
I guess Charles kind of mentioned something on different partners he has worked with before, right? That just came to my mind that this is a team sports, I guess, to a certain extent. And starting out, having a team is going to be crucial for the growth. So if he has any advice on how to choose a partner or a teammate in this growth journey for somebody who's kind of starting out, what would be the best steps?
So there's two things I would give you. And the first one's probably the common one that you hear everywhere, and that's finding somebody with complementary skill sets. First thing is you have to know yourself to find good partners, because you have to know what you're good at and what you want out of a partner to make sure you select the right partner or partners. So complementary skill sets are important. So if you're the person who's going to be the deal finder or the underwriter, then you don't really need somebody else who's going to be doing the same thing. You might want somebody who's more social, who's very comfortable posting social media content on a regular basis, and who's looking to engage with investors. And the second thing I would tell you is, the figuring out what's important to you. And I would actually tell you that's even more important than the complementary skill sets. So one thing for me that I've realized, and this was just something that, through the years I realized is very important to me, is a strong work ethic. And we all have different life situations and different things that we want out of this business, but know what things you're not willing to compromise on and what things are very important to you in terms of values and beliefs, because those are things that you want to find partners that are going to match or exceed, whatever you have put out there.
Yeah. And I'll say, I mean, Charles and I, both switched partnerships, in the last year or so. And I got a much different perspective on it now than I did 3 or 4 years ago. And, it's the alignment, it's the, if you look at your 3, 5, 10-year plan, do you guys want the same things? I think it's okay to partner with somebody on one deal without being completely aligned. You need to be aligned on that deal. But if you're looking long-term partnership, are you aligned for the long term? And do you guys communicate well, and can you guys, come together at the table when you guys disagree and, figure out the best course to go? And that's, I think when I looked at the partnership that I left, a lot of it there was, and Charles said the same thing about his partnership. We wanted different things. And since we wanted different things, the option was somebody had to not get what they want, or we had to split, and we ended up splitting. So I think, when you're looking for the longer term partnerships, make sure there's a long-term alignment there.
Absolutely. Makes sense. And I guess one of the things that came out is first try to do 1 or 2 deals with them so you get a better feel of what they are before getting into like a longer term
Mhm.
partnership, I guess, right? So that's something you guys have done.
And that makes a lot of sense. It's almost like dating somebody before you marry them, right? So you want to test it out and see if it's a good fit before you say, let me just enter into something formal that's going to be long and difficult to unwind.
Makes sense. Makes sense. Okay. I guess with the current economy changes that's happening, I guess, and a lot of uncertainty out there, how are you guys running the business differently, or what are you doing differently than it was done probably a year ago or before, all in terms of business or calculations or everything that goes around it?
Good question. Yeah.
Definitely a good question. So I think the biggest thing now is you have to be more conservative with everything you look at. And, even if you were being conservative a year or a year and a half ago, I think the level of conservativeness is different than what you have to be now.
Mhm.
And that's because market conditions have clearly changed. There's a lot more fear in the market, probably even more than people are willing to admit. And you have a lot of obstacles that you have to overcome. So you need to make sure that your fundamentals are in place. You need to make sure that you have good underwriting and good principles when you're going out there finding deals. You need to be prepared to deal with a lot of objections from investors and to be able to talk them through those objections, because the perspective in the market and on syndication has changed a lot. So you need to be ready to combat that and to be able to provide investors with the guidance and the answers they need to walk through that.
Yeah. Well, one thing, and Charles mentioned this, but one thing very specifically we've done to be a little more conservative is we've reevaluated how we make this distributions, and we've communicated with a lot of our investors in some of these cases where, hey, we've got money to be able to distribute, but we're going to hold off a little bit because we're uncertain about what the future is going to hold. We're uncertain here. So if we have a certain amount to distribute, we're just keeping a little bit more cash on hand. So we had a certain amount of reserves that we wanted to keep when we underwrote the property and when we purchased the property. And now where things are, we're re-looking at that number. And typically when we do our distributions, we take everything that's come in and we take, everything that's gone out, and we look at, okay, here's our bottom line. Here's what we want to keep in the bank for our reserves. And we typically are going to distribute what's above the reserves, and that's kind of the way that we look at our distributions. But essentially what we've done is we've raised that reserve amount on a lot of our properties. And we just tell our investors, hey, look, we do have money to invest, but we want to keep a little more cash on hand so that just in case something happens, we're ready for it. And if nothing happens and this everything blows over, that money's going to come back to you anyway. So just a slight delay.
Makes sense. That just brings me to the next question, is that with the current scenario, raising capital from investors and having investors as excited as they were before to invest with us when we are kind of stopping their, I guess, distributions, how do we continue to have them invest in multifamily business?
Mhm.
Well, I think it's fair to say that no investors are as excited now as they were a year ago. So you have to kind of start with that perspective in mind and realize that there may be some skepticism. There might be some people that invest in deals that were told they were going to get distributions at certain times and they're not getting them. There may be people who, aside from just not getting distributions, maybe they're needing to put more money in deals because some deals are requiring capital calls.
Mhm.
So most investors that have had exposure to syndications at this point probably have a healthy degree of skepticism, and you have to realize that's the starting point. So you need to be prepared to tell them why they should be investing with you. And some of the questions you're going to get right now, and some of the questions I'm getting, we're raising for a deal right now, is have you guys done capital calls in the past?
Mhm.
Am I going to need to do a capital call here and put more money in? Because that's a concern people have. If
Mhm.
they're investing $50,000 or $100,000 and they're doing that in 5 or 10 deals, that may be a lot of their liquidity. So they may not have an extra $20,000 or $30,000 to throw in each one of those deals because it starts adding up over time.
Mhm.
So it's a concern for a lot of people. And another thing that people want to know is the track record of the sponsor that they're with. So for somebody just starting out, especially being you don't have that, it's going to be very important that you partner with somebody that has experience and somebody that has a good track record so you can play with that and set people's fears at ease. Making sure that you have a sponsor that's been around for a bit. And the reality is if you've been around for a while, you probably are going to have some deals that didn't work out the way you expected. That's life. But being able to come out the other side and weather the storm and have that experience goes a long way to put investors at ease and to make them more confident that they're investing with somebody that's going to keep their money safe and hopefully grow their money.
Yeah. And I'll follow up. I mean, kind of piggybacking on what he said is, how do you adjust is what I'll answer. And, with a lot of investors a little hesitant and money not there because of how the stock market's performed or hasn't performed, or, the crypto bubble or whatever. One thing that I've found success with is looking at smaller deals. A year ago, 100 units was kind of like my bottom line. And, since raising capital is a little more difficult right now, in order to keep on doing deals, we've kind of lowered our bottom line. We'll entertain some smaller deals because, this is how much capital we think we can raise. And now with the investor sentiment not being able to raise the same amount of dollars that we could in 21, one of the easy answers is you either bring more people into the deal to raise capital and do it properly, or find some smaller deals, or both.
Makes sense.
Yeah.
Okay. And since this takes me to the next question, is that you guys are trying to do a lot of stuff, right? Raising capital here, trying to find deals, talking to brokers and all that. One of the things that came up during our discussion is like you guys block time to call people and stuff like that. So I guess my overall question is, how do you optimize your time for success in life in general, whether it's personal life, professional life, and overall, how do you manage time efficiently and get stuff done the most efficient way?
The biggest key is learning how to prioritize. So two things. One is learning how to prioritize, and the second is learning how to say no. And being able to prioritize, because the reality is most people usually have more on their plate than they can actually handle. And when that starts to happen, you have to be able to say, okay, what are the things I need to get done? What's good to get done? And what's not so important, but if I get it done, great. And you need to have different tiers for those tasks so that way you know which ones are essential that you have to make sure you get done. And make sure you put a deadline on those tasks as well, so that way there's actually a timeline to go forward and complete them. And the second thing, saying no, that's going to be more important than you may realize. So I think many people in our society are conditioned to say yes. I'm one of them. I'm used to saying yes. I don't like saying no to people. But what you realize is that starts to monopolize a lot of your time. And you'll realize that, okay, all those tasks that I was supposed to get done, well, I didn't actually get them done. So it's learning to prioritize, and then saying no to anything that doesn't fit what you deem is important.
Yeah, I love that. I'll tell you something. I asked the question, big burning why, because I misquoted Stephen Covey one day. Okay. And the question he puts in his 7 Habits book is, how do you say no to the things that are going to distract you? How do you say no to the good things? And a lot of times really good things get in the way of you doing the things that you need to do. And his answer was having a bigger burning yes, inside you. And that way it's easy to say no to the other things. And I misquoted him once and said big burning why, and started saying big burning why for a long time. And that's how that big burning why got into the podcast. He's got a misquoted Stephen Covey. But yeah, if you have a bigger burning yes, you can say no to a lot of those things. Something I did, and this is kind of like a bastardization of the one thing by Gary Keller, is especially when I'm really overwhelmed or busy or have a lot of things on my plate, is I'll sit down, I'll think, what is the one thing that I need to do right now? Now, in the one thing book, there's more than that, but what's the most important thing I need to be doing right now? You do it. When that answer becomes clear, you do that most important thing. And when you're done with that, you say, okay, what is the next important thing? And then something else that I done with varying degrees of success in the past is you put fences around, other important things in your life, like time with your family, time with your wife, time with your kids. Okay, you put fences around those specific days, so I don't do business calls on Sunday ever. Saturdays are largely, business free, so my laptop doesn't open up very much on Saturdays. So put fences around time with your family, and every other minute of the day, you hustle. So
Makes sense.
Yeah. We got time for probably one more question. So, if you got something
one last
burning,
question.
go.
Somebody who's starting out like myself, I guess I get split between 2 ways of getting started. One is working with somebody who is doing bigger deals and helping them raise capital and being part of that team, and doing that way for a bigger sponsor, putting bigger deals together, versus partnering with somebody doing smaller deals 20 units, 50 units, and raising capital and just doing all those things together with somebody like on a smaller deal. Which way would you recommend would be the best to get, I guess, in the bigger leagues faster, I guess, to start already with the big players, or to start with smaller deals and then gradually getting up to those big ones in terms of doing the business, in terms of raising capital, in terms of overall growing in the business?
I'm going to answer your question with two questions. The first one is, what's more important to you, cash flow or appreciation?
Okay. I mean, cash flow would be good, but I guess again, I'm having my W-2, so I guess I'm looking a little more longer term right now.
Then the second question is, what's your definition of big leagues? Because I think everybody has a different definition of what that is to them.
Got it. I mean, I guess doing bigger deals, getting bigger checks, managing bigger properties is like dream is like 150, 200 units deals would be, becomes normal to you. You don't really stress out doing those kind of deals would be like when I got big enough, I guess.
So with the answers that you gave, I would say the approach for you is to align with somebody who's already doing bigger deals and find a way to get involved with them.
Mhm.
And it could be through raising capital. It could be finding other ways. Maybe you find a deal. Maybe you do some asset management. Maybe there's different tasks that you can fill, but align with bigger groups. If you would have said you wanted cash flow, I would have told you the opposite and said you're probably better off going for the smaller properties and seeing if you can find ways to JV them as opposed to syndicate.
Mhm.
But being that you're looking to keep the job, you're kind of looking at it as a long-term horizon.
Mhm.
I think syndicating deals, larger deals with bigger groups, and finding ways to plug in is probably the best path forward for you.
Yeah, I'll add to that. I mean, part of it depends on where you want to get to. If you eventually want to be in the bigger groups, you should probably stretch as high as you can when you begin. What I will say is it's a lot harder as a new investor to get involved with the established groups. Okay, as somebody trying to get into the game, it's a lot harder to get involved with the established groups until you yourself have a track record. It's not impossible. Okay, it is absolutely not impossible. You can definitely find people who will be willing to let you in. It's just, it's a lot harder. So what I would say is stretch as high as you can. It's a lot easier for somebody brand new to start working with somebody else that's brand new, because both of you are brand new and you're going to, both be a little less picky on who you work with. But I would say stretch as high as you can. Try to get involved with an operator who's been around for a year or two and establish some track record by, working with them, and then use that as kind of a stepping stone and to get into bigger and bigger deals. So yeah, I mean, that's my opinion on it, but yeah, stretch as high as you can, get involved with people that are, that have the most experience and best track record that you can, and grow from there. So
thank you very much. Appreciate your advice.
Yeah. All right. And we are about out of time. So one last question for each of you guys to wrap it up. Charles, go first. How can listeners learn more about you?
Sure. I have a Linktree page. So I'll give you that link, Brian, so you can include it in the show notes.
All right. We'll do that. And so head to the show notes for anybody listening, hit that Linktree. And if you don't understand Linktree, it's going to give you a page that has all of his links on it. I think it's a great tool. All right. Karan, same question for you. How can listeners learn more about you?
Sure. I have a website called valueplusps.com, which stands for Value Plus Property Solutions. And I have a Instagram, which calls Freedom by Rentals.
Mm-hmm.
So that's where I post a little bit on my deals that I'm working on and things
Mm-hmm.
like that. So those would be the best places to reach me. And yeah, my email is info@valueplusps.com if anyone wants to reach me on email.
Awesome. So we'll have that in the show notes as well for both of you. And got to say, I very much appreciate you guys' time today. We had a lot of good discussions. So thank you very much.
Brian, thanks for having me. And Karan, it was nice connecting with you.
Same here. Thank you very much.
Hey, if you like that episode, make sure to subscribe. But more importantly, if you haven't joined our multifamily educational community yet, which we call the Tribe of Titans, you are missing out. Get 30 days free by clicking the link in the description to this episode, or go to thetribeoftitans.info, and we'll see you there.